Good morning, folks. How are you? Just a quick little review. If you've been following along on my X account, I've been giving analysis and short little video, pre-market analysis and whatnot, giving levels, targets, and just observations on what I believe the market was going to do this week. So this closes out my week. The target I gave for this week's trading in NASDAQ futures was delivered. If you recall, and if you haven't, you can find all this information on the YouTube channel and the supplementary analysis videos I've posted on X. So for the folks that are wondering about the Telegram channel, I'll be using that for study notes. Okay, so you won't have to be in there to get the real time stuff because that ends this month, and I'll be sharing pretty much like summaries, things that are noteworthy. I'll be doing a project in June where I'm showcasing how if I was using electronic journaling versus the handwritten high touch versus the high tech approach to journaling, how I would go about doing it. It doesn't mean that this is what you should do. It just means that I'm answering a question that most of my students have asked me for a number of years. Even charter member students that have gone through my private mentorship, they've asked if I could share how I would journal, and they'll be doing that the last week of June. So anyway, with all that monologue out of the way, this is a daily, I'm sorry, excuse me, this is a weekly chart of the continuous contract for NASDAQ. And you can find that on TradingView with the symbol NQ number one exclamation point. And it's important to use that when you're using higher time frame charts because it's a better way of showing continuity in price delivery because the front month or nearby contracts are always spotty when you look back in the higher time frame. Even if you change it to a monthly or weekly chart, you're not getting the true perspective. So a continuous chart is helpful in that regard. So this wick here, I did an analysis on about a month ago, and you can look at it again on all the content I posted on X and on this YouTube channel. I said this wick here, while we were below it down here, we would gravitate up into it, and I was looking at the lower half of it. So this line here, the 22,103 level, that's the consequent encroachment or midpoint of this wick. So I'm only interested in this half and then grading that in quadrants. So what we do here in this area is salient to what we'll do in next month or 5 or 6 weeks. Ultimately, it's likely to see these highs get taken out because I'm not trying to pick a top. So the market has been shunning the traditional bearish seasonal tendency. So when it does that type of thing, it's usually very bullish. So I want to keep my focus in the lower half of this wick before I marry the idea that it's absolutely going to go above here. Okay, so while I'm submitting to the idea that order flow is bullish, it's likely to go up there, but I'm not hardlining that it's going there. I want to see how it delivers inside the lower half of this wick, which is why I have all the gradient levels here. Okay, so if we take our attention down from this in the weekly chart, inside this area here, we'll look at the daily chart and see the fair value gap I was mentioning this week and a couple weeks ago. You take a look at the daily chart here. This is the fair value gap. So this candlestick's high, this candlestick's low, and it's a SIBI. So we have this inefficiency, and I have gradient levels in it. So it's the upper quadrant, consequent encouragement in green, lower quadrant, and then the low and high is obviously shown by the rectangle being applied. So if we go back and look at what we were doing when price was trading in here, my commentary was suggesting that this low I wanted to see it continue, obviously, but if it were to drop below that level, I wanted to see it act as institutional order flow entry drill, which is just simply a partial entry into an imbalance. Okay, so we had that actually deliver. That's probably random, and then the market trades higher, comes right back down into immediate rebalance. This candlestick's high, and I'll annotate that for you here. Now, I could get carried away here and make this video very, very long, but that's not my interest. But the immediate rebalance here, and then sends it higher up into the lower quadrant of that daily fair value gap. So that for me satisfies my weekly objective. I'm certainly content with that. Everything delivered as I was expecting. Everything I gave guidance for on X this week has been just perfectly delivered. So it's really hard to be upset when the market does that. So let's take a closer look inside of the lower time frames. We'll drop down to a 15-minute time frame next. Here we are on the 15-minute time frame. You can see the relative equal highs here. So I went over this in the X analysis video clips and whatnot and posts. So if you see these relative equal highs here, that was a upside objective. And then ultimately, if it gets above that, we would see it run up into that daily fair value gap that you can see the shade up in here. Lower quadrant slammed by the bodies. Look at that. That's absolutely beautiful. And then we have a break lower. What we do today and Friday is really of no consequence to me because I could care less. I have things I have to take care of in my personal life. So this will be the last discussion I have over price action. So I want to take a look at this with you. And this is a 15-minute SIBI, which you can see over here. This should be anchored like that. It's body to wick, dropping down in here. Quadrant, consequent encroachment in green. So since it was a SIBI, it's going to change its character to that of something bullish. Positive about sell side efficiency that's just below this 15-minute inversion fair value gap. We consolidate, rally up. I broke this down in here with these two wicks on X, and it was just perfectly delivered as a long entry, trading up into the 21,562.25 level, that relative equal high. And then the market breaks lower all the way down to the low of the 15-minute inversion fair value gap, but specifically to the consequent encouragement of this candlestick right here. So the mohawk, the little coloring outside the lines that we allow for with the wicks because they can do damage, the bodies tell the narrative. Bodies are respecting the lower quadrant. We wick down, touch the consequent encroachment or midpoint of this buy side of sell side efficiency. Always include your volume of bounds or the higher body. That'll be a more specific topic that we'll cover in the book. The drop down in here is FOMC, and then we rip higher, trading aggressively into this run right here is NVIDIA related. So the market trades up into the lower quadrant of that daily fair value gap there.